Hello students, welcome back to next episode of Mastery in Commerce. In the last video we had seen the circular flow of income and I hope you all remember it. This is the video of economics, right? Accountancy video I'll be posting most probably next week. So this video again in continuation of the first chapter we will be continuing the next topic of stock and flow. These are the two concepts which are introduced to you in this chapter. So you should know what are these because in exam it is observed in the recent years that they give you certain items in the question and they ask you tell whether this calculation falls in the category of stock or flow. So you should be clear about what stock is and what flow is. So let us go. First we will see what is stock. Stock refers to that variable which is measured at a particular point of time. For example, stock of goods in the godown as on 31st January 2025. So as the name tells you, when something is measured at a particular point of time, then it is called stock. It is not time dimensional because no time limit is given. It is only at a particular spot we can say. As you remember in accountancy you have done about opening stock, closing stock. So that was in the opening how much stock is lying in the godown. At the end of the year how much goods are lying in the godown. So that is closing stock. So that is a particular point of time. So it is not time dimensional. The examples of stock are national wealth, national capital, money supply, etc. Now we see flow. Flow refers to that variable which is measured over a period of time. For example, birth rate in the year 2024. So it is observation of the entire year. If I am calculating that what is the birth rate for the entire year, so it becomes time dimensional. So flow is when there is a starting time and the end time when we are measuring anything. The period of time could be a day, a week, a year, etc. So anything can be included in the period of time. They are time dimensional. So flow is always time dimensional. Remember that. Okay. Now these two concepts are dependent on each other. Means although they are different in many ways, but they are also dependent on each other for each other's calculation. How it is? Take an example. If there is a water tank and water is stored, then it is a stock. And the water which flows out of it through the tap attached to it is a flow. So if you want to increase the flow of water, you have to increase the stock. In the same way, if you want to check the stock of water left with you, you have to measure the flow of water out of it. So stock is dependent on flow. The money which you have in your pocket, you go to market and purchase something. So money in pocket will, you will take out the money and spend it. So that is a flow. But if it is lying in your pocket, then it is a stock. So in very simple words, if we see stock is at a particular point of time, how if I want to see that how much is left in my pocket, I have to check that how much I have spent. So my calculation is dependent on flow. So similarly, if you want to spend more, then you need more money in your pocket. So they both are mutually dependent on each other. Now let us also see the difference between both of them. By now you have understood. Stock is measured at a particular point of time while flow is measured over a period of time. Stock does not have a time dimension. Why? The flow has time dimension. Stock is a static concept. Static means it is fixed, while flow is a dynamic concept. It is continuously changing. Example of stock is population of India as on 31st March 25. So on a particular day or date when I am seeing that what is the position of population, then it becomes stock. Total number of Maruti cars in Delhi, etc. Suppose today I want to see how many Maruti cars are there in Delhi. So that becomes a stock concept. Similarly, flow concept, number of birth during 2014. So during means entire year I am checking. Maruti cars manufactured during 2025 means entire year I am checking. So when the whole process or time dimension is given to me, it becomes flow. While on a particular day or point when we are checking something, it is stock. Now this is something related to flow. So flow is circular because you have seen circular flow. You remember in your previous PPT, there was circular flow of income which we studied. So there are two types of circular flow, that is real flow and money flow. So the name tells us real does not involve money, while money flow involves money. So let us see both of these terms also what they mean. Real flow refers to the flow of factor services from households to firm and the corresponding flow of goods and services from firms to households. Right? So only services are involved. What we do, we go and work in the firm and we help them in manufacturing. They also give, the firms also give to households the goods and services. From where do we get the goods? Where do we get the services of people? Any engineer or mechanic or electrician, we get through a firm. So, goods and services which firms are giving us and the jobs which we are doing in firms, right? Factor services are the services provided by factors of production. What are the factors of production? Land, labor, capital, and enterprise. Now, money flow. Now, as the name tells us, when money is flowing between the households and firms. So, money flow refers to flow of factor payment from firms to households for the factor services and corresponding flow of consumption expenditure from households to firm for purchase of goods and services produced by firms. Factor payments refers to wages, rent, interest, and profit. This is the money payment done to the factor payments, to the factors of production, right? So, when money is involved between both households and firm, that is called money flow. This is the last topic for the video, the difference between real flow and money flow. Real flow is the flow of goods and services between firms and households. Money flow is the flow of money between firms and households. Real flow involves exchange of goods and services, while money flow involves exchange of money. Real flow may be difficult at the time of barter system because finding a common factor between both will be difficult. There is no difficulty in money flow, right? Money flow is very easy in terms of money we calculate. Real flow is also called physical flow, while money flow is also called nominal flow. So in exam, to confuse you, they can give you physical flow instead of real flow. So please remember, physical does not involve money, while nominal flow involves money. So over here, I'll end my video. If you like it, please like, share, and subscribe. Help your friends also who are going through the time period of preparing their board exams, and few of the schools are having their periodic assessments also, so that they see the video and understand at least a recap, and in the notes form which I have given you, it will help you to learn the concept. The questions which may come from this topic are many questions given in the sample papers. If you see, I know by this time you people have bought many of the sample papers, so you will get many questions which ask you categorize the following types of expenses. So this is a very important part. We will meet again in the next video. Please work hard for your studies and be successful. Bye for now. Please like, share, and subscribe.